Wow, I don't know if that actually worked or not. I had a couple of blips here. All right, guys, welcome to the channel. Welcome to the podcast. My name's Jeff Kaufman, and I'm all by myself today. My partner's going out of town. You guys know Ken Rossix, a partner over at Sub2 Empire. And normally at this time of day, or this time in the podcast rather, we would be answering questions, but we don't have any questions. We actually have one question from a previous video a long time ago. I'm not going to address it in this one. It's just kind of not the right forum, I guess, for this one. But to the person that asked that question, I will respond to you. Don't worry about that. So today, I thought we would just jump right in. Today we have our special guests, David Putz and Nathan Turner from JKP Holdings. And you guys may know these folks because they are everywhere, man. You guys are all over the place.
So we'll just clarify them real quick. So Nathan and I do our podcast together. We're not both JKP Holdings, but we appreciate the shout out. And
you're JKP Holdings to me.
For one of our companies, my goodness.
And you know what? True. I noticed that. I saw, Nathan, I never knew this about you, but it says you have labeled Earnest Living there. I'm sorry, Earnest Investing.
Earnest Investing. Yeah, that's mine.
Okay. All right. Well, hey, man, you learn something new about folks every day.
Yeah.
So, So how you guys, I guess, we try not to keep this scripted. We have, admittedly, we do send out questions and things like that, but I guess, I don't know, where you guys want to start? You just want to jump in? I kind of want to know, or at least have our audience discover a little bit more about you guys. So maybe do some introductions here. Dave, tell us a little bit about yourself.
Let's do it.
Yeah.
Yep.
So I got started being a landlord in 2005. Did not enjoy that quite a bit. And 2010, I got introduced to short sales and buying notes through a large hedge fund. Started doing that full time in 2012 as my investment strategy when I left the fund. Since then, we've bought tons of non-performing notes, tons of performing notes, primarily from banks for the first 10 years. We didn't get into the seller finance sub-2 world to quite recently. And then Nathan and I joined up as teammates in 2020 to start doing podcasts and webinars together to bridge the gap between note buyers and note creators and everything in between. But yeah, primarily our space has been moving away from being a landlord to a leanlord kind of mentality and buying the notes that you and your crew create.
That's awesome. By the way, guys, if you haven't figured out the theme for today, this is all about note buying. All right. I failed to do that. Sometimes I just get, I had a terrible night's sleep and whatever complaint I can come up with, whatever excuse I can come up with, I'll do that. So Nathan, what about you? Let's talk about a little bit of your background.
Sure.
Let's cover the stuff that Dave didn't already discuss about you.
Yeah. It's interesting. We've got kind of a similar background. I did fix and flip back in 05, 06, 07. And same thing. I became a landlord for a little while. Figured out very quickly I did not like that at all. I liked the cash flow, but I didn't like anything else about it. So that I was introduced into the note world in 2008. I went to my first note conference, 2009. Started buying non-performers in 2010 and worked through hundreds of them over the years. Just recently, 2 big developments. We put together a fund so people can do this passively, and also took over a Diversified Mortgage Expo. which is just a place where people can come together. It's all about networking and education, no sales, just a place for everybody to get together and hopefully come together to do deals. That's kind of the ultimate goal. So Dave and I met after one of the conferences that we both attended. Do you remember what year that was, Dave?
2015, I'm going to guess. 2014, 2015. Yeah.
Something like that. Yeah. And we both knew a guy that's also in this industry. And we were like, oh yeah, I know Jack. And you're like, yeah, I grew up with him. I'm like, yeah, no way. So that was kind of the connection. And then we ended up being on the same flight home. So we sat across the aisle, I think it was, and just chatted for a 4.5-hour flight.
Yeah. From Vegas to Philadelphia.
Yeah.
Right.
Yeah.
So I didn't know that. That's news to me. So you, by all means, the name of the fund. How do people find out about your fund? Like what? I'm not sure what kind of investors you're looking for in your fund, but by all means, you can plug away at that anytime you choose. So,
well, okay.
Yeah, absolutely.
Yeah.
I don't think we're doing anything illegal, right? If I just
we'll edit it out later.
Yeah. Go ahead.
Well, I'm just going to say, so it's earnest investing. We can take on accredited investors. It's a 506C, so we're limited by the powers that be to accredited investors. Minimum investment is $50,000. We pay out an 8% annual return. Easiest money you'll ever make.
Right on. Is this and so I know you explained a little bit, but can you maybe dive just a little bit more into what type of fund? What is the fund actually? What is the fund doing?
Surprisingly, we buy notes.
Okay, that purely. I thought maybe there's something. I know I follow a couple of folks, a couple of different folks. I got a couple friends that have some funds, and they're getting into some crazy. Like, actually, you guys might know OCG, Matt Owens with OCG.
Yep. I don't know if you know him. He's actually part of our private call.
Okay. Yeah. Okay. Perfect. Yeah. So you know what he's doing with the debt validation stuff, and very interesting. I who'd have thunk it? I'd have never thought that would be.
So just to get started here, one of the things I think we found with note investors or note creators that you guys don't know you can actually sell a note. We've gotten that question a million times. Like, what do you mean? I can actually sell a note that I created, and it can be sold multiple times. It's not just one. And you can be sold in all kinds of different ways of doing it. You can create a first, second. You can sell partials. There's all different aspects to get your money back from your actual sub-2 wrap deal that can be possible. That to get money back in your pocket, do more deals is easily possible with connecting note buyers in our industry.
And that's our goal. We want to cash you out so that you can go and do it again, sell us another note, do it again and again and again and again.
Very interesting. Yeah. So I guess maybe let's walk through. What about your latest deal? What's the latest one you're working on? Let's concentrate on that for a minute. I say one. You probably have multiple going on, but but let's just pick one and let's make it really interesting. I want something that's gonna confuse me.
Okay. So I'll give you one that really hits home for you guys. We're working with a seller right now who has about 25 notes he's looking to sell. In the first 3 or 4, he didn't know that you need an underwriter to underwrite owner-occupied properties, right? He didn't know that. He didn't actually have an RMLO assigned situations. Those two facets are huge for us note buyers. Now, we hear all the time, listen, the thing's performing for 3 months, 2 months, or whatever. And the answer is, well, it's good until it's not. And I think a lot of people in this world who are creating notes have been through a downturn or a foreclosure that they don't know what a defense attorney could do. They don't know what a judge can do. And the problem is, if we buy this thing, we know those kind of things could come up. And we don't want to be stuck where a situation where the judge can do anything and everything and say, wait, I'm going to untwine this whole thing and this borrower stop paying. What happened in the beginning? It's just not worth our effort. So making sure that when we're buying this thing, we get the underwriting package, that they prove the ability to repay is in there, and that they had RMLO. And that was a first step of buying a portfolio of 20 loans right now from this gentleman. The first step.
So, okay. So Now we're getting into legal stuff, which which I absolutely love. I kind of want to know the dirt on this.
Yeah.
So essentially, what is the underlying issue? I'm assuming is that the notes weren't written. They're not well written notes, correct? I mean, like um, so in a situation like that, is that something that even though it's not well written, obviously you're going to get a discount on that package, right?
I'll let Nathan. We'll go back and forth
okay,
here.
Yeah.
Okay.
For us, it's all about risk management. So yes, because it wasn't written properly, and there could be a couple of different issues. It could be that the language in the note itself was done improperly, or insufficient, or too much, where there's too much in that note, and then it ends up starting to contradict itself, and that becomes an issue. So that's one issue. And then the other side of that is, like Dave mentioned, going through an RMLO. So that's a residential mortgage loan originator. And that's a Dodd-Frank thing. If you're not familiar with Dodd-Frank, oh boy, you really need to be, especially in your world. That's a big deal. So that's something that can transfer to us. So we're taking on extra risk if it hasn't been through an RMLO, if the paperwork was done wrong. Most of the time, almost always, these issues can be fixed, whether that's whoever owns the note before they want to sell it, they can fix it before they sell. That will make it more attractive and more valuable. Or you can sell at more of a discount, and then we'll go ahead and fix whatever issues are out there. Obviously, we prefer not to have to put in extra time, effort, and money into it. So if it's done properly in the first place, that's your best case scenario.
Okay, so when you say, I'm sorry.
No, they say in addition to that, real quick, is that the underwriting thing is something that we can't reverse.
Right.
We actually have
That's going to be my question.
Underwrite them all over again, right? We can fix modification in the language sometimes, but if the borrower doesn't have the ability to repay, we can't fix that.
Right.
Okay.
Right.
Yeah,
if
you
they
answered my
do,
question.
we can put them through their MLO and then have that all be okay. But if there's a situation where the borrower wasn't properly underwritten, that's a major issue.
Okay. All right. So that clears that up. So one thing I've always been curious about, obviously there's different levels of, just like there are different levels of contractors or quality contractors or anything. Do you run into issues with RMLOs potentially? I mean, I would assume that there's a playbook, right, that they use to underwrite these notes. So, do you ever run into issues? Do you ever run into issues with banks, for example? I don't know.
Yeah, good
I'm
question.
not a note buyer, so I'm just assuming that you've probably got some issues with certain banks or something.
Oddly
like that.
enough, we don't. Banks are kind of structured to sell to the big boys, the Fannies, the Freddies. So they actually structure it extremely tight. So for the first 10 plus years of us buying notes individually, we never worried about any of this stuff, right? We didn't care about the stuff because banks wrote paper, particularly for the highest level, where you guys can write different kind of paper that the banks can't. And that's a very, very big facet for these borrowers, right? But what we're saying is, you can become a note buyer, which is, we call it lazy investing, right? We look at spreadsheets all day long and write emails, right? Or you can do the hard work like you guys are doing and get on in part to an infinity return and make money on money without touching any of your own capital, which is crazy, but it could be happening. But for us buying it, we're concerned with that risk level of, when you create that note or the note buyer, can I foreclose legally without any issues, right? And if it is an issue, can I fix it? If I can't fix it, I can't buy it. It's not a discount to fix a borrower who makes 40 grand a year and their payment's $3 grand a month. I can't fix that.
Right.
Yeah. So we talked about the last time we chatted. We talked a little bit about kind of our model is much lower level than where you guys are at. So most of the, we don't even write notes per se. We do a lot of contract for deed stuff. I love contract for deed just for the simple fact that I'm not giving legal title to someone. It just protects us. It keeps us more protected. But we have run in fact, we've got one right now that we are there's so much margin in this thing that I think we might actually contemplate creating a note. So I guess, do you have any recommendations for the folks out there who might be just getting into this, or
Dewey.
yeah, just getting into it, or I would imagine the first recommendation is don't underwrite your own note, right?
Yes.
Yeah.
Yes.
That's the first one. So on the other end of that, who are you recommending to write your notes, or is it just any RMLO, or is there a class of RMLO that we need to be concerned with?
I'm going to say no. Nathan, do you have anything? I mean, we trust the professionals to do their professional job.
Yeah, the RMLOs, I don't think it matters. They've received that designation from someone else, so it's not like they can just say I'm an RMLO and start writing paper.
Okay.
So whatever qualification they've gone through to get that classification, that's good. I'm not concerned with one or the other.
Okay.
Yeah, we put on a class to what are the 14 points that make a note valuable to us note buyers, and that's not only for creating notes but also buying notes, right?
Yeah.
Some of the big points is underwriting. And another thing is, it's a stickler for us, we apologize to get on soapbox, is not writing notes at 8%, right? Because what you guys don't realize, when you go to sell it, note buyers discount based on the interest rate, based on whatever return they're looking for. So the higher the interest rate and the lower the term, the less discount you're going to receive from us, note buyers.
Gotcha.
And if you have a lot of margin, I would tell you to write a first and second, right? So you have a $200,000 property, you're in it for 125. I'd write a first at 140 and a second at 60. And then you could sell that first loan off at 130 to get a small discount. And then you have 60 grand second lien for the next 25, 30 years cash flowing. We don't care, right? We're going to get a nice return, and you guys have a cash flowing cow forever.
Yeah. We actually have this particular property that we're talking about. We actually have a little bit greater margins than that. It's we probably, it depends on who you talk to. If you talk to Ken, Ken's super conservative, and I'm ultra like fantasy land guy. So I think we've got 100K in this thing after it's all said and done. I think we could have 100K second sitting there just paying us year after year.
Beautiful.
But yeah, so we will be reaching out at some point. Sorry.
So you mentioned, like, at the start of your question, we're talking about a note, like a note mortgage, deed of trust versus a contract for deed. So that's a fun one. So let's just talk about that for a second.
Let's do it. Yep.
It's fun because I'm a huge fan of contracts for deed. When I got started, that's what I did. We were in Ohio, they're called land contracts. But that's how I got started in notes, was selling houses on terms, creating paper with land contracts. So I'm really familiar with them. I've dealt with hundreds of them, and I'm a big fan. Dave, on the other hand,
what's the big difference, Nathan? For those who may not know, what is the big difference?
Big difference is who's on title. That who's on first. That's really the idea. There is on contract for deed, the lender's on title. In a note and mortgage or deed of trust, the occupant, the one in the house, they're the one on title.
And foreclosure happens with without the Ohio exceptions and stuff like that. Most of the time, contract for deed it's a forfeiture of contract. It's not a foreclosure process that takes 18 months in Ohio, right? I get that. I just don't like the liability of owning the property. Yeah,
that's the trade-off. And ultimately, I don't want to own property. However, for me, that's a little different. But again, lazy investing. I don't want to own property.
Yeah,
kind of one of the things that I'm moving into right now. In fact, I've got I'm actually doing this right now. I have an individual who is right there at like that 50% DTI. The debt to income is right there. She could probably go out and get a loan from a bank, but for me, I'm a little nervous about it. Admittedly. So what I am doing with her is I'm using the contract for deed sort of like a rental agreement where, if she performs for the next 12 months, I'm actually going to convert her to a note, and I'm actually going to give her legal title to that property.
Awesome.
And I think that's one thing that I don't know. There's many people that really I'm sure it happens every day, but I just haven't really heard of anyone using that in that sort of that sort of fashion where, if you use it on a trial basis. We had to take a property back that we had on contract for deed over here on the other side of the river from us, and man, I'll tell you what, it was easy breezy. It was, it was in Illinois, so it wasn't that much cheaper, but but it was super simple. I mean, it was a couple of court dates, and that was it. It was done.
So you mentioned Illinois. Here's something you have to be aware of for note buyers, right? Each state has their laws on what a licensing a note buyer, owner, creator has, right?
Mm-hmm.
And Illinois is one of the states where if you own a note, you must be licensed as a debt collector, even if you use a licensed servicer to protect you. You must be in. So us note buyers, there's certain states like Georgia will buy in because we can get a license easily. Illinois, Kentucky, all these states that are here, that it's just either a long process or expensive to maintain it. So if you only have 2 notes in there, but it costs you $4,000 a year to register, it isn't worth us to buy the license.
Yeah.
So one of our 14 points is, here's the states that we mostly buy in. Create your notes in those states for the better chance for note buyers to be buying your note of.
All right. So what are a few of those states? Give me an example. I'm sure they're
Kentucky, I'm trying to rattle my head. Just Kentucky, Maryland. Maryland goes back and forth. We avoid North Carolina a lot of times. PA, the Northeast is just forget about it.
Yeah.
California, Kentucky,
Oregon.
There's a bit of a trend here.
Yes. The coasts are bad, right?
Yeah. I'm seeing some similarities.
Another thing we have to worry about is usury law. Make sure you guys know what usury law is and what the max limit is. We don't need to be buying 18%. Yeah.
Yeah. And every state's a little different.
A great point there. So yeah, like Missouri usury here is 10%. Mm-hmm. I know you said earlier in the podcast that don't write your notes at 8%. What does 10% look like to you guys?
Better.
I mean, obviously it's better, but I'm saying, like, give us some of your criteria for, give me the ideal note. Give me what an ideal note looks like for you guys.
Go ahead, Nathan. A legal one, not a fake one.
Okay. So, ideal note. I would like it to be in Texas if I had the choice, because if it goes bad, if they quit paying, Texas is the fastest place to foreclose. If we need to go that direction, which I hope we don't. But Texas, I would like a minimum 10% down payment from the borrower. I'm going to buy that note at 25% of like investment value of the property. I want to make sure there's a good chunk of equity in there for myself. What am I missing, Dave?
You want to be non-rural?
Yeah.
Right? I don't want something with less than 15,000 population where the county has less than 100,000. Ideally, here's another thing for you guys, your crew. Try getting the borrower to pay servicing fees.
Yeah, that's a good one.
Because what happens is, if that thing's $200 a month or $300 a month, we got to pay out $20, and make sure it's flexible in your note agreement, right? Make that part of your agreement that you literally have the borrower pay servicing fees. It's part of the underwriting process, but allows us to buy it at a net yield versus subtracting that cost.
Gotcha.
So if the language is servicing fees, that the borrower is responsible for servicing fees, then it can transfer from server to servicer. If that fee changes one way or the other, then you're not stuck. So that would be the language I would use, is they pay for servicing fees, whatever that might be.
Yeah, and I see Cindy on LinkedIn mentioned that PA definitely needs licensing. Thanks, Cindy.
Mm-hmm. So with the rural thing, I want to touch on that real quick. Is that simply just because of I don't know? I follow I use Forex Factory to follow like all the jobs data, the housing data, and all that stuff. Is that the reasoning behind the decision on trying to stay out of the rural areas, or like what is the logic behind that?
I don't want to sell it. I don't want to be stuck with a house that I can't sell. Like, again, we're lazy. We can't sit there for 90 days. And if we have to fix it up, find like contract local, it's not worth our time, energy, and effort. We want to be in and out of that property as fast as possible. And if we're going to go to an auction with it, right, we want to be able to sell it at the auction. It reduces our exit strategies.
Yeah,
And
so,
Dave and I both came up through non-performing notes. So
Yep.
we joke about this, but only kind of joking. Our expectation, everything is going to default. Everything. Everyone's going to stop paying. And then what? So anytime we're looking at a note, we're always looking at that worst case scenario because we've lived through it.
Yeah.
So that's one of those things is, can I resell this house? If it's a town of 2,000 people, that's going to be a lot harder than if it's 20,000.
Yeah. Yeah, that makes sense. It's literally just, I mean, if you think about it, it's literally just like owning an investor who buys houses would run into the same thing. So you're just kind of transferring that through. I just want to make sure that was clear for everyone, because that could be like, well, what does it matter if they're underwritten, like if the borrower is underwritten and they've got fantastic underwriting? It's the actual property is the issue, the location is the issue.
This is where it gets kind of funny because with notes, we're not buying the real estate. We're buying the financing behind the real estate. However, we are interested in the real estate because there's a chance, however high or not, like there's still a chance that we're going to end up owning that house. So we are interested in the real estate and we do research on the real estate, but actually we're not. Ideally, we would never actually own that house. We're just so interested in the paper with the background being that property.
Right.
So another point is when you're creating these notes, you have the borrower paying servicing fee, you have the rural part of it, right? You have the underwriting part of it, right? So those are all good. If you're going to do your own servicing, which we recommend not doing it, make sure you don't use a piece of paper or, envelope and cash pictures.
Apartments.com. What about apartments.com?
Yeah, we won't name names. Yes, we have someone who actually used apartments.com to track a record, which doesn't help us at all. And the borrower's not getting monthly statements sent to them,
right?
Which they don't know anything. Again, we're worried about. I know most people who got in this space the last 4 or 5 years, everything's performing. It's all pretty and wonderful. The problem is it's all wonderful until foreclosure happens. And that's when you face the music. And everything you've done that you thought was right is wrong. And that's the problem we run into.
Right.
So that's the piece of education that we're trying to put forward now is if you do it properly, you don't have anything to worry about. And we don't have anything to worry about. But if it's done improperly, oh man, it could get really ugly really fast.
Yeah.
All right. So
we'll give you some more points. Give you some more points.
Yeah. I mean, I'm loving it. Like I just want to sit here and just listen. I'm supposed to be the host of this thing. I just want to listen. It's fascinating.
I guess we're also used to hosting our own show too, which is great, right? Yeah. So another thing is the type of property. Now this depends on the investor, just like the CFD versus mortgage note. We don't get into buying raw land or mobile homes in parks. We just don't do it, right? It's not something we buy that we get involved with. We pass on it as quickly as we get into it.
There's other people that do.
Yes.
Not to say that it's a total deal breaker. Just it's a deal breaker for Dave and I. It's just not something that we do.
All right.
Yeah.
Yeah. So no mobile homes, no rural land.
Yeah.
All right.
Yeah.
Okay.
Another thing is, I would tell you guys is seasoning is a questionable thing. We table funding, meaning the fact as soon as you close on it, you want funding. It depends on the investor. I want to see 1 or 3 months of payments. Nathan will buy at the table with arm and loan underwriting.
Yeah.
Okay.
So again, down to preference, and that's one of the cool things about notes is it's so much about just preference of.
Yeah.
Seems very flexible. Like you can be, there's no hard and fast rules, unless they're your own.
Yeah. There are some hard and fast, but kind of the adage is there's no such thing as a bad note, just bad pricing.
Yep.
So there is a price for your note, even if it's done all wrong, and even if it's in the wrong state, and there's still a price for that note. You might not love it, but there is a price for it.
Yeah. Yeah.
We actually have a chart that shows that the expected discount of a note just based on yield, because you take a 7% note that's over 30 years and you say, listen, what can I possibly get for this thing? And the question is, okay, first, making sure if term is shorter, it's great. but I'm looking at my chart now. It's just a kind of an idea of what it looks like. And what happens is if you have, say, a 30-year note at 8%, and we want 14, expect us on a $100,000 note to pay $62,000 to get our yield. So you're going to take a 38% discount because the fact that 8% to get it up to a 14 is that. Everyone's different of what their yield number is. Our rule of thumb is shoot for a 14 and a 70% investment to value for the note buyer. We can go into the thickness of our calculators and just confuse the hell out of you guys, but it's not worth it.
All right.
No, I hear
Well,
that's a different thing.
So let's just say that you knew a guy that really, this is all sounding really fantastic. Don't have to be a landlord. You don't even have to be you don't have to be on title. It all sounds great.
Yeah.
What is the first step in the process of learning about how to invest in notes? Where would you guys turn? Obviously you guys are in the education space when it comes to notes too.
Sure.
What's the very first step you would take if you were really serious about starting to invest in notes versus?
I'm going to jump in real
properties?
quick. You
Yep.
guys have a huge space. You guys have people that don't know each other, and we're astonished by that because in our space, we all know each other. It's a very small space. I would tell you that one thing is networking.
Yeah. Yeah, I don't think I think that carries over into our space as well. I can tell you, just kind of a little side note. I have all but stopped every once in a while my marketing campaigns. Like I don't really market anymore. It's all about networking. So I can understand what you're saying there. I'm the benefactor I was a benefactor of this deal I just told you about, where I've got all this juice in this deal, and that was all through networking. So I would double down and say that's probably some of your best sources for actually getting deals done is through networking.
So networking is one. I'm talking free, right? YouTube and social media. The next steps I would say is talk to as many people as you can and find the right training course that fits you. And lastly, but probably should be first, is go to conferences. You have the networking there, you have social media there, and you have the training all in one spot.
Yeah.
And you guys don't have nationwide conferences, do you?
For sub 2 seller finance.
There's some big people in the space. I just it's not. I'm one of those people. For us and what we do, I don't seek that stuff out. I just don't like I don't like the influencer thing. I just like to do my own little deals. I like to so I'm definitely one of those people that's I'm not looking to grow in the sense of or scale, as they like to say. I just like doing my deals. I like spending time with I actually like my free time, so I try and keep things small. But the way that I
would
understand,
challenge you to come try it out, because I would tell you it's not as big and glamorous as like you think on stages, and there's no lights and glamour, and it's 400 people and
Earth crowd.
Yeah.
We're
there, so it can't be that popular. Can't be that famous, right?
Yeah. No, that's great. I mean, I could. You may see somebody that is on this podcast showing up to one of those.
I'd encourage you guys. DME's back in May in Nashville. I mean, it's a couple $100. It's a weekend in May. You're going to meet other note buyers, other note creators, and the education. You're hip at the housing market. It's a weekend that I promise you'll get your money back times multiples.
Any reading materials that anyone that wants to even maybe some people are watching this or watch this later on that don't even understand what we're talking about. Is there any recommended reading out there, or do you just say just go out to YouTube and check it out, or what?
There are books out there.
There are books. There's not a ton. There are some. Maybe we ought to write one, Dave. I don't know.
It wasn't on the questioning. I'm just really curious because
there are a couple books out there.
I just ordered a new Kindle, so
kind of the granddaddy. If you're really interested, the granddaddy would be invest in debt. Jimmy
Yes,
Napier.
that would be the first one.
That's
Okay.
a really good one.
All right.
That'd
I'll
be
throw
good to
that up
start
in
with.
there.
And then, I mean, check out our channel. There are some other note trainings out there. That's actually what I was going to say. If somebody's getting started, networking is huge, but also get some education, because this is not real estate, like I say. So Dave's got a bunch of trainings and things that he does, and I think they're pretty good. Maybe I'm biased, but he doesn't even pay me to say that. But no, it's worth it. And you have to know what you're doing, because it's not real estate. You can get burned.
Okay. Well, let's talk about your training. I mean, what
Sure.
how do people get in touch with you first? I mean, I had your website up here
That's okay.
somewhere. There she goes.
Oh, look at that. Fancy.
Yeah.
So, yeah, you can definitely go to the website. There's a note buyers, there's training, education there, social media. I would encourage you guys to just tune in, ask questions. There's no stupid questions, right? And just find out what fits you. If you're an ex-landlord or note creator, you're going to understand it a little bit better than most people. However, as we say, we're on the legal side. We're on the paper side, not the brick and mortar. I don't care what your refrigerator looks like. I don't care what kind of kitchen cabinets you got. I don't care what color of wall you painted it. All I care about is the collateral good and the borrower going to pay me. If it doesn't, can I take the property back? But there are things that are important, like your servicer and things like your attorney, who most people are scared of. Understanding the numbers behind the note game, right? Why is term important? Why is interest rate important? And things like that are really crucial just to get the basics foundation, then grow from there. I would encourage you to check out and if you have a question about, hey, I see you don't cover this, I got this one over here, we can make a recommendation saying, hey, that's a great person. We know them real well. There are some people in the space we don't recommend, but that's okay. I would tell you that the reason for coming out with trainings is not to make money, is that we've come across situations over and over and over and over again. And it's like, instead of me repeating ourselves, let's just put it into a quick video thing. We have a very intense course that people want to get into that me and Nathan run. It's a 5-week course, but on the flip side, we have a calculator training. I have a beginner series, which is like $100, right? If you want to just get the basics understanding and then get bigger and bigger and bigger. I think the big difference between you guys and us is our calculators are totally different, right? We're
Really?
looking at every state. We're looking at the cost of things. We're looking at yield numbers. We're looking at value of the property, but we can't get inside the property. We can't look inside your property before we buy the note. We can't talk to the borrower. So a lot of little things are a little different from us than compared to you guys, where you're looking at that brick and mortar. I'm looking at the paper compared to the brick and mortar. The next step is the due diligence is, like you guys, is probably the hardest process of everything. It's the secret sauce, if you want to say. And working with your servicers, your attorneys, your collateral management company, all those kind of services are there just to learn from. And then I would say, again, tune to our podcasts, our videos. We do a live show on LinkedIn and Facebook, and just get to know the people you enjoy, that you feel fit you, and reach out to them, ask questions. Even if they're beginner questions, we can refer you to people. But yeah, I think the biggest thing is the beginner series just gets you the foundation of what is a note versus a mortgage. We all say we're note investors. Some people say we're mortgage note investors. They're two different phrases. Just understand it, and we play with the numbers. We're spreadsheet geeks.
Yeah, we're very similar in the sense that you guys are, like I said, you're not trying to make a ton of money off of the education side. We're the same way. I do it for deal flow.
Yeah.
Admittedly, I do it for deal flow, and I'm sure you guys are probably have some sort of the same type of model. You guys are note buyers, so it probably behooves you to teach people how to do this correctly.
Absolutely.
So very, very cool. I admittedly, I am a little uncomfortable with this conversation right now because I am, since the last time we talked,
December, I looked it up. We were in December.
Yeah.
Yes. December 6th, 2023.
Yeah. Yep. That makes sense. And I just, I was uncomfortable with that conversation. I'm uncomfortable with this one. It's probably pretty obvious. Usually this is a really easygoing type of thing.
So we can help out here, right?
Yeah.
So I would tell you one thing about you wrap sellers, right? is that we cannot ever buy your wrap note without paying the underlying debt off. We just don't do that.
Right.
It doesn't make sense to us to do that. So understand if you're creating a note and the underlying debt's 200 and you rate the note for 210, you're not going to be able to sell the note.
Yeah.
You're going to hold that note for as long as you possibly can and make the yield spread.
And hopefully everybody pays.
Yeah. Because if that property goes down in value and you have to foreclose, and now you sell for 280 and you have to pay back 300, you're in a bad spot.
Yeah, that makes sense. That makes a whole lot of sense.
Right.
All right. Well, let's talk about your all your different socials. You've got. I think you're probably pretty much like us. I mean, you probably JKP Holdings is probably you just probably go out and search that name on any.
You can do that. I know Nathan is less on social media than I am. He's doing a little better, encouraging them, right? Making some posts, which is great. So again, we're two different companies. We just work together quite often just to kind of network because we're collaborations as well as competing at the same time. But most of the time, end of the day, we just don't share our bid number because I don't need him stealing from me, right? But the other day, we look at deals and say, oh, man, I don't like this deal. Hey, are you interested? And yeah, I'll buy it. I won't buy it because of different parameters, right? We do have one big parameter, too. The value of the property has to be above $50,000. And we max out between $250,000 and $300,000 just because we just don't want to deal with the $1 million properties with the $1 million dollars in their pockets and deal with attorneys. And the lower properties, just not enough margin for us to buy it if we have to foreclose on it and make money on it. The UPB of the note doesn't matter to us, right? I don't care if you have 10 grand on a $200,000 house. If I could buy it for $4 or $5 grand, I'm happy to do that, right? Yeah. That's parameter.
Makes a whole lot of sense. I mean, you want to be where the most activity is. Obviously, the median income or the kind of the median price ranges make more sense. I don't get involved in anything above here in St. Louis. 350,000 is about the ceiling. For me, unless it's a multifamily, I'll do a multifamily. But very, very cool, guys. I am incredibly intrigued, and I think you guys are going to be hearing from me for sure.
Yeah. I would tell you if you understand wrap notes, understand that kind of stuff, and you want to get into this is more of a borrow money at 8%. Go get 11, 12, 13, 14%. Make the yield spread with knowing the fact that you may not have to worry about it again and you go back to the coffin. If you can create your own notes, that's a golden ticket. Create your own notes and hold it. If you can borrow at 8% and create your own note at 8% and you're leveraging it up, I would do that in a second. Yeah. Those are the golden things. I see some more comments on LinkedIn from our friends Cindy that she recommended debt with invested debt by Jimmy Napier. And she mention a comment about the yield chart. I see Helen said very informative. Thank you guys, our followers and whatnot. We do stream live on LinkedIn, Facebook. I would encourage you to do that. And Nathan, I presume tickets are up, right?
They're not. The website's there, but I was just thinking about that this morning. I need to roll over and make sure the 2025 tickets are available. So I'll do that here in the next week so that those tickets are live and people can go and get their ticket. Can't wait to see everybody. What a great event. I mean, I know I'm biased. I know it's my own thing, but I got to admit, I'm proud of it.
First of all, let's get the title of that event. What's the name of that event so people can actually search it?
So it's called Diversified Mortgage Expo. If you search that, it'll pop up. It's in Nashville. Next year, it'll be May 2nd and 3rd. And it's just a ton of fun. We come together like the night before, we do an axe throwing tournament just as a networking fun activity for people a total icebreaker just for people to get to know each other and have fun. Ideally, we're there to help people get to know and like each other. That trust part, that's up to you. You guys got to figure out how to trust each other on that. But that's the whole goal, is just get people to come together, learn, network, do deals.
Awesome. I think you're going to see me there. I think you're going to see me there this year.
Yeah. I would encourage you to check it out. We have a couple other note creators who join us, and they were shocked about what they found and the information, the knowledge, and the fact that they can sell more notes to more note buyers coming there. But we encourage you guys to come to us first. But We understand the fact that if someone gave you a better yield than we get it, right? We didn't even talk about partials. Partials is another way of selling a note where you can
That's an
sell
interesting one.
180 payments instead of the 360. But it's okay there, right? That's where we go from. I did post on the YouTube live the Mortgage Expo link directly, so people can see that. But other than that, I would JKP Earnest Investing. Take a look on Facebook and LinkedIn. We're both active there. We don't do much TikTok stuff, but our kids
Come
can
on, I'd love to see Nathan dancing. That'd be awesome.
I'll see what I can do. No, not into that kind of thing. However, reach out, come talk to us.
Yeah.
We're not famous. We're very open to whatever conversation. I hope that comes across. We're definitely not intimidating type folks.
No.
Give us a call. We'd love to chat.
Yeah. The only thing that's intimidating, well, I mean, look, that was going to sound really bad. So the only thing that's intimidating is the topic. Like it can be, I think for people that are just not in this world, it's, it's something totally fresh and new. And
yes,
it would be, I think for someone like me, I mean, I understand what notes are. I understand the process of buying and selling notes, but I don't know the intricacies and the details of notes. And it terrifies me, to be honest with you. So it would be probably a wise decision to get a hold of some folks just like you and get in touch. And definitely, I think this Nashville thing is definitely going to be on my calendar. So I'll go check it out. I encourage anyone watching, anyone listening to this, get a hold of these guys. Honestly, they're, every time we talk, I'm still a little flustered, it's exciting, but it's also very, makes me very nervous. So, all right. You guys have any closing words, anything that you would like to put out there? Anything you guys, you're welcome to plug anything you like. We certainly want to be supportive.
I think we should ask your famous last question, Nathan.
Let's do that. That's a good idea. So, for sub 2 and what you're doing.
We do this all at the end of every show we do. This is Nathan's final question for every guest. So go for it, man.
We want to know from the people that we're interviewing, because I mean, everyone we have on is an expert in their field. What do you see coming down the pipe? What do you see happening here in the next 12, 24 months? Where's the economy going? Where's housing going? What do you see coming down?
Well, I actually addressed this last week. My personal belief, obviously we don't have a crystal ball, but I think the writing is on the wall. And I don't get into politics, and I refuse to have a conversation about politics. But I do believe that depending on which way this election slides this November, I think is probably not going to be the major factor in the housing markets. I think the big factor is going to be these interests. Like, I personally believe if we drop 1 percentage point, I think we're going to have it's going to be chaos. I think it's going to be mid 2021, 2022 all over again. I think we're going to have a ton of activity, and I think we're going to see housing prices increase yet again. I think that's what's going to happen. That's just my personal feeling about it. I mean, it just makes sense. It's just pure economics at that point. But right now here in the St. Louis area and markets all across the country, we aren't at these super low inventories like we were during that time period. But we still, I think I'm in St. Charles County. We only have like a 45-day inventory here. I mean, it's nothing. So it's and now we are in an area that's pretty highly desired, and I think St. Louis County, just across the river here, I think they are sitting at like 75 days. That's not a lot of inventory, man. There's still a major shortage in housing. So I think there are people sitting on the sidelines right now that are just really waiting for a drop in that interest rate. And I think the magic number is 1 point. We drop 1 point, I think it's going to go nuts.
We actually had Melody Wright on a couple weeks ago, our last show, and she talked about, she's been 30 years in the space, how the used to be a week to sell property is now pushing back. There are 51 on average, 80 markets. She talked about all kinds of delinquent mortgage situations that are not being accounted about because the fact that they only pull from the top servicers, that the spaces that you guys are in, so that they're not even looking at those numbers. So if people are interested in hearing what the market conditions that blew our minds, Melody Wright, we did an interview with her back in the 6th of August, I think it was, and she really kind of looked at some stuff down and broke down numbers. It was really interesting to hear the data and how what's being said out there is not always what's happening, and straight data points has been good.
Yeah, I know. I mentioned I like to I like to get alerts I get alerts from Forex Factory. I mean, if you guys don't know what Forex Factory is, it's just it's fantastic. And a lot of the alerts that I get are not like they're coming from the government, the most trustworthy source on the planet.
Right.
And so I take it kind of with a grain of salt, but I also think that the information that they're putting out, even though I don't trust it, it's what everybody else is seeing as well. And so I think that has a lot of influence on the decision making. And I don't know. We shall find out. We shall find out. We'll see what happens.
Awesome.
So
It's going to be an interesting time.
yes, sir. Yeah.
Time for sure.
All right, guys. Well, hey, I want to thank you very much for joining us here. Or joining me. Ken's going, but absolute pleasure again talking to you guys. I learned something new every single time, and I will see you guys here in Nashville. You said that's in May.
Yes.
May. Yeah.
Perfect.
May 2nd,
Perfect. May 2nd, May 3rd.
Yeah.
In Nashville. It's the Diversified Mortgage Expo.
Yes.
Yeah, man. Now I got to get tickets live for sure. Okay. I'll work
What's
on
funny? What's funny is you guys, you made it perfectly clear early on that, notes and mortgages are two totally separate things, but you named it Diversified Mortgage Expo. That's interesting. Interesting. Now, no, guys, I say again, Nathan.
I inherited the name, but
got it. Okay. Well, guys, thanks again. Really appreciate it. You guys enjoy your weekend.
You too.
And I'll see you guys in May.
Awesome. Thanks.
Take care.
All right, guys. Take care, guys. All right, guys. That's going to wrap it up for this week. I want to thank Nathan and Dave again, and we will catch you guys on the next one. While I am at it, why don't you head over to sub2empire.com. Just check out what we got going on out there. Admittedly, I'm a little bit flustered today because these guys blow my mind every time I talk to them. So you got me in rare form today.